Hey everybody, I hope everyone is doing well and had a good day. This is the overview of the Emini 5-minute chart for Tuesday, October 22nd, 2024. Let's take a look at the daily chart going into today. I've mentioned this over the past few days. I know I mentioned it yesterday too, but market's going up in a channel, but it's possible we have a late leg. We have 3 pushes up, 1, 2, 3. It's possible the third leg subdivided into 3 pushes of its own, and there are different ways to look at it. Maybe this is a leg, a pause, another leg, a pullback, and a third leg. Tight trading range, price action up here. Tight trading range here, possible final flag. The bulls are trying to get a breakout, but now they're getting bad follow through. Tight trading range, far above the moving average. And at some point, the bulls that are buying momentum are going to give up because there's no more momentum, and they're going to look to buy lower and buy value. And the bears know that, and they can look to sell for at least a scalp, but we don't really have a major topping pattern here. But the bears do have a few things going for them: the 3 pushes up and the possible final flag here and tight trading range here. Yesterday we had a high 2 signal bar, high 1 here, high 2 signal bar here. We did not trigger the buy above the bar. Let me back up and go into expectations going into the day. I thought that if we did trade above the bar, it's a high 2 at the top of a tight trading range with a bad signal bar. The context is not all that good either, so I thought there would be sellers above yesterday's high. And then as far as below yesterday's low, we have a bad stop order sell signal bar. It's a trading range bar closing above its midpoint. The odds are there were buyers below the bar. Even if it was a decent sell signal bar, the market's in a tight trading range. Most breakouts of trading ranges fail. So breakouts are expected to fail here. So traders are fading breakouts. They're buying with limit orders below bars, scaling in lower, and they're selling above bars, scaling in higher. And I also want to get into expectations based on the 5-minute chart. If you look at the sell-off yesterday, the odds were that this would get a second leg down. And you can argue there are several legs down. We sold off, we paused, second leg, another pause, and then a third leg. But this is all so tight that the odds are it's going to get a second leg. Now you can also argue that that was a second leg. So this is the sell-off I'm talking about. This is the first half of yesterday. And you can see the market is in a trading range. We had a sell-off here. Maybe you consider it down to here. Leg 1, and then a pullback, and then a sharp leg 2. Possible second leg trap in a trading range. But still, the odds favor a second leg down after this. We have breakout points that are getting retested. And the odds are, even if this pulls back deeply, there are probably sellers above for a second leg down. And that's good information to know coming into the day. However, you have to have expectations about that second leg. The question is, are the bears going to get some sort of measured move of this breakout? Maybe the breakout. I apologize for the drawing tool right now. Maybe the bears are hoping for a measured move based on the size of the breakout. But when the market's in a trading range and it gets maybe a 70 or 80% pullback, do you really think the bears are going to get down here before it pulls back? Right now, the bears' minimum target is to test the low tick of the sell-off. So this sell-off, they're looking for a retest of yesterday's low. But like I just said, let's just do the math really quick. How deep was this pullback? if you consider the sell-off to be here, we had a 43.5 point sell-off and a 33.5 point pullback. Did I say 43.5? Yeah, so we have a 77% pullback. That's really deep. And when the market pulls back about 2/3 of the way, I apologize, I had to pause there for a couple of minutes, so I'm trying to pick up where I left off. I think I was talking about the depth of this pullback being, what did we say? Something like 77%. And the point was, when the market pulls back more than 2/3 of the distance of the breakout, the odds of getting trend resumption are significantly reduced. So in other words, in this case, it's less likely a bear trend and more likely a trading range or even a bull trend. And if it is a bear trend, the best the bears are hoping for is something like this, a very broad channel. But basically, just important to remember, the deeper the pullback, the more likely the breakout will fail and reverse. However, I was saying that this will likely get a second leg, and toward the end of yesterday, we're testing breakout points, maybe right here. We're testing this breakout point. So I thought there would be resistance here and a second leg down, but I thought the downside would be limited. I thought the market was now in a trading range, big down, big up. This was a deep enough pullback to disappoint the bears. So, in other words, all I'm trying to say is that I was expecting buyers below yesterday's low, and I have yesterday's low drawn here in blue and the high of yesterday as well in blue, and here is today. So we opened with the gap down, and that was the second leg that the bears were hoping to get. Here's leg one, deep complex pullback, and then leg two. And you can see what happened on bar one. Big gap down, follow through selling. We got a bear bar, but close well above the midpoint. It's a trading range bar, so weak follow through. And let me just fix that. It attempted to break out below yesterday's low, but could not close below. And that's a problem for the bears. And then it tried again at yesterday's low, found support again. So we have a tight trading range on the open, testing support. Now the bulls can make the same argument. This rally should get a second leg, even if there's a deep pullback, so probably buyers below for a second leg up. So we're going sideways to up here. Low one short below bar 4. We have a micro channel since bar 1. Bar 4, obviously a weak sell signal bar for stop order bears, probably buyers below, and there were. The low one triggered, but we're at the bottom of a trading range, bad signal bar, and far below the average price. So probably going sideways to up here. Getting lots of overlap. So even though we are creating higher highs and higher lows, it's a very weak bull trend. You can call it a bull trend. It's a bull channel, but so much overlap, it's almost a trading range. However, we're in the buy zone of the trading range, so it's slightly more bullish here. Probably buyers below these bars. Then the upside breakout on bar 8. Bar 8 is not a particularly strong bar. You can see it closed well below its midpoint, but the breakout distance is more important than the close of the bar. So look at the overlap with the prior bar and the prior bars. The market went a far distance above all the bars to the left, and this traps traders. Traders see a tight trading range, bears are selling at the highs, scaling in higher, and then all of a sudden, they get this. They're triggered. Bears sell above bar 4. The market goes against them like 7 or 8 points, maybe 6 or 7 points. That's disappointing. and that creates support. So the sellers here become buyers. Support at the high of bar 4 and at the high of bar 7. Bad stop order signal bar. Inside bar, trading range bar, 3 consecutive trading range bars, and all the bars overlapping. This will likely get a second leg up. On a smaller time frame chart, this is a breakout pullback, and there's likely a high 1 buy on a smaller time frame. The market rallied, then it pulled back. There's at least one bear bar within the tail of bar 8, and then traders bought the close. The problem is we're at resistance here, so we rallied but found sellers. Now we're back at the price area where we found sellers and the moving average. Also testing a breakout point to the left right here. So a couple of reasons to expect sellers above. And we're getting a reversal bar on bar 10. But this has become a fairly tight bull channel. So the first reversal down is likely to fail. We have a micro channel since bar 5. So we have a 6-bar bull micro channel. We may pull back, but the odds are we'll find buyers below and a second leg up. This is 3 pushes up. We rallied on 1, rallied on 4, rallied on 8. So we are expecting 10 bars and 2 legs sideways to down. So I think always in bulls, okay to exit longs below bar 10. And some bears might short, but they know that this might only be a minor reversal. Maybe they sell, taking a chance. And looking for at least a scalp will probably at least test the high of bar 7. So we broke out on bar 11, follow through. Not a very strong breakout bar, but similar to bar 8. Market broke out a fair distance below 10, trapping traders below, and that will produce a second leg. We rallied. This is all a pullback, so we sold off to the low of 11, rallied into the close of 11 and on 12, and then sold off again, probably going at least 1 tick below the low of bar 11. And we do on 13 and find buyers. Now we have a tight bear channel and a micro channel for 4 bars. First reversal up, probably going to fail. This might all need its own second leg. And we are expecting 10 bars and 2 legs sideways to down, as I mentioned. Continuing to sell off, but then we get bar 16. Now bar 16 is a strong buy signal bar. It's a bull reversal bar, closing on its high. We have 3 pushes down. We sold off on 11, 13, and then 16. So we have our, let me back up. There's a couple of things I wanted to talk about with different time frames today, and this is one of them, and then I'll get into it again a little later. But when we're expecting 10 bars and 2 legs sideways to down after a wedge, that is based on the chart that you see the wedge. So the problem with expecting 10 bars and 2 legs here is that this is more of an implied wedge. It's fairly minor, not made up of many bars, and just look at the pushes. Bar 1 is a push. Basically, just bar 4 is a push. And it's really more clear on a smaller time frame chart. It's easy to miss this on the 5-minute. So what I'm saying is you might get the 10 bars and 2 legs on a smaller time frame where the wedge is more visible. So even though we have, what do we have here? 6 or 7 bars down, that might be enough of a correction. Plus, it looks like we tested 50%. Here's the 50% pullback of the rally. We're finding support, the market having trouble getting below the 50% pullback level. So 16, always in bears, probably exit above 16. Bulls can buy, looking for a second leg up, leg 1, pullback, and then maybe leg 2 here. And then a good entry bar. 17, bull breakout, crossing the moving average, closing on its high, probably going at least a little bit higher, and probably going at least 1 tick above the high of bar 8. Weak follow through, but bar 18 is a bad double top, probably buyers below. and we rallied one tick above 8, found sellers. The market's in a bull channel at this point, and what do traders do in a bull channel? They buy sell-offs and they take profits above prior highs. They take profits during rallies. So, in other words, they buy low and sell high. They buy at support and sell at resistance. So, we can take a look at this channel. Maybe you draw it like this, or something like this. And the odds favor we're going to continue in the channel. However, bull channels are bear flags. So 75% of the time you're going to get the bear breakout. Only 25% of the time you get the bull breakout and a strong rally. There's an exception. It's probably more than 25% chance in this case because the market is overall in a trading range. We're still in the lower portion of the range. We could easily rally to yesterday's close or even up here to yesterday's high. But for now, the selling pressure is not great. We have a bull channel with a weak sell setup on 19. Micro double top 21, but 4 consecutive dojis. It's really a bull breakout and then a trading range. Probably buyers below, scaling in lower for a second leg up. We rallied close to the channel line, found more profit taking. Another sell setup below bar 22, but a weak signal bar. And the context really is not great. Couple of legs up, good for the bears to look for a correction, but look at the selling pressure through here. We have open gaps. Really no great bear bars, just a couple of dojis. So any sell-off will probably be minor. We triggered the sell, and then 24 broke out a fair distance below 23. Another example of a breakout where the distance is more important than the close of the bar. So bar 24 actually closed with a bull body, and it's a trading range bar, but it fell far below bar 23. Many times the range of bar 23, maybe 4 times below. And that traps traders. And that increases the chances of sellers above and a second leg down. Also, you can think about bar 24 as a high 2. Or maybe a high 1 on bar 20. We triggered it, and then a double bottom with 24. But 24 is a big signal bar. And the context is not great. If you're buying fairly high in a bull channel. This is more of a profit-taking area, or the sell zone, where bears will sell for scalps, the bulls are taking profits. So the upside here is probably limited, and bar 24 is likely to get a second leg down. Even though it's minor, the bears now have a trendline break. Rallying 25, but bad follow-through. We're in the sell zone of the channel. We're beginning to turn down, but the bulls are getting a lot of bars above the moving average. That's good for the bulls and a problem for the bears. Now we have support on the moving average. Triggered you can call it a high 3, so high 1, 20, high 2, 24, high 3, bar 29. We triggered the buy, but immediately reversed back down. What about selling below 30? Some traders will, but the selling pressure still is not all that strong. All of these bars are overlapping one another. It's a trading range, and if we sell off, there's probably buyers below, scaling in lower. Bar 24 is good for the bears. It broke a trend line. So what we have here, we have a rally, trend line break, retest of the highs. The bears are hoping for a major trend reversal. A lower high, you can go out of head and shoulders, top, left shoulder, head, right shoulder, and then a decent sell signal bar 30. So some traders will take the sell. Always in bulls, probably exit below 30. And again, bears can sell, but they need good follow-through. Follow-through selling for the bears, but the risk here is we have trapped traders on bar 24. And let's think about it. What happened on bar 24? Think back to the breakout on bar 17. If a trader sold anywhere down here, above any of these bear bars or above this bull bar, which wasn't great, so let's argue you sell above bar 15, micro channel, you're expecting a second leg down, you get trapped on bar 17. So this area becomes support. Look where 24 tested. We tested an area where traders got trapped. And the bulls break out, pull back, second leg. But now we may be testing that area again. So the bulls hoping for a double bottom, bull flag. The bears are hoping for a break below 24 and a double top that leads to a measured move down. But now we have 2 legs down, 1 pull back, 2, and here 1 pull back, 2, double bottom after a stronger bull breakout than the bear breakout. And then bar 33. 33 is a problem for the bears. I always check the 50% measured move as well. And the bears able to get one close just below the 50% pullback level, but then immediately reversed on 33. So 33, I'm not sure if we ever went always in short, but if we did, 33 is a place where bears will get out of shorts and bulls can buy. Might be testing the bull trend line right here. Maybe that's the channel line. So there's a risk we can go all the way up here. Bad stop order sell below 34, probably buyers below. We sold off for a second leg, 1 pullback, 2. It's nested, and again, it's testing the 24 low. We got a higher low, double bottom, bull flag, and then 37, a strong bull bar. If traders don't get out here, if bears don't get out here, they get out above 37. A second reversal, bull bar closing on its high, and bulls can buy. Continuing to go sideways, tight trading range here. The bears trying to break the bull trend line, but going more sideways than down. It would be stronger for the bears if they got a strong trend line break far below the trend line and then a retest rather than going sideways. And then 40, another example of a bar where bears will exit, bulls will buy. And then the bulls will simply change the trend line to something like that. And maybe you change the channel line as well, something like that. Bull breakout and follow through, but again, approaching an area that might be a sell zone. Profit takers above bar 22 likely. There are a lot of bars sideways in here, probably a trading range. Traders will take profits up here. But then we got follow through 42. And that is discouraging for the bears. You now have 3 consecutive bull bars. And if this is a sell zone, why did the bulls get follow through? Now we have a bad sell signal bar 42, probably buyers below and a second leg up. And then just judge the strength of this reversal. Does it look like these 4 dojis are going to reverse this breakout? Probably not. You have breakout points, we have open gaps below. Maybe we're testing the high of bar 30. That was a breakout point. If a trader sold above 30, they're trapped on 41. And the market's retesting that price on 45, finding support. We bounced, and we're continuing higher. You can call bar 42 a high 1. It's an inside bar. It's an implied high 1 and then high 2 on bar 46. The bulls hoping for a breakout, pullback, second leg up. The bears are hoping this becomes a double top, but we're still within a bull channel. And so far today, it has been easier to make money as a bull than as a bear. Just look at the shape of the day. We have a bull channel with room to the channel line. We're getting vacuumed up to the channel line. Let me just draw the close of yesterday too. Now we have 3 or 4 consecutive bull bars vacuuming up to this channel line. This is just the way I have it drawn. Other computers will draw it different ways, but this will be a reasonable place to take profits. It's a late leg, no matter how you look at it. Maybe 1, 2, 3, or 1, 2. However, some traders will argue this is a strong enough breakout to reset the leg count. This is a market cycle reset. This is a leg 1 that needs its own second leg, and then more follow through 51. So the market is not paying attention to this channel line as much as the bears would hope. We broke above it on 51, pulled back, retested it on 52, and found buyers. And we continued to rally straight through the close of yesterday. Now this is what I wanted to talk about again with comparing time frames. You know what I'm going to say about a breakout of a channel line. I mentioned it earlier. In general, the expectation is that 75% of the time, bull channels are bear flags, which means you get the bear breakout. 25% of the time, you get the bull breakout, and it's strong, and the market rallies in an even stronger bull trend. And that's unlikely. And here you can argue, well, we broke out strongly above the channel line in a strong trend. However, this is very climactic behavior. It's very extreme. Just count the number of bars in the micro channel. This is an 11 bar micro channel testing high in a trading range. Again, here's yesterday's high. And we know what happened at the beginning of yesterday with a very steep sell-off. And then look at bar 55. Bar 55 is the biggest warning of all. Look at 55 compared to the rest of the bull bars in this rally, and almost to any of the bull bars earlier in the day. 55 is clearly the biggest bar in this rally, and that's very climactic behavior. Typically, when you get the biggest bar late in a trend, and by late, I mean after 20 or 30 bars in a trend, so in this case, the bull trend has been going on for more than 50 bars. Typically, when you get the biggest bar late in a prolonged trend like this, it's either exhaustion or a measuring gap. We know it's on a breakout gap or a breakaway gap. It's not the beginning of a move. The move began down here on bar 1. We've been rallying all day. So 55 is either a measuring gap or an exhaustion gap. Now, put yourself in the shoes of both sides here. If you're a bull and you bought for any reason and you get bar 55, bar 55 is a windfall of profits. 55 is considered a gift bar. So if you're long and you get bar 55, you might say, wow, that's a gift. That's a lot of profits in such a short amount of time. I'm just going to take my profits here. It's very extreme. We're getting very far from the moving average. 11 bar micro channel, high in a trading range. It's a good place to take profits for the bulls. If you're a bear, you're thinking similarly. This is a big bar. It might be climactic. The market is racing up to some level of resistance. And the bears will take this short if they're very aggressive. And I don't advise taking this short. But some bears will take the short. They're measuring the momentum. It's getting very climactic. We have consecutive buy climaxes down here, here, here. Even here, we rallied, sold off, rallied, sold off, rallied again. There's a lot of problems with this rally. Basically, if you're long and you get bar 55, usually best to take profits on that bar. And if you're flat, you probably do nothing here. 56, big bear bar. If you get a bar like 56 and you're so far above the moving average, if you watched my last video from yesterday, you saw that I mentioned the default exit GTFO, and this is an example of that. If you're long for any reason, even if you bought the close of 55, probably wise to get out of longs below 56, although not as strong of a sell below 56. So if you're flat, not necessarily a great sell, more likely big up, big down, big confusion, going to go more sideways. Now, I got sidetracked and I wanted to talk about the higher time frame comparison, so let me speed it up here. I mentioned that there's only a 25% chance we get the bull breakout and the upside breakout of a bull channel and an even stronger rally. More likely the market reverses within about 5 bars. And what I want to talk about with that is the different time frames. Like I mentioned down here, this was a more minor 3-push pattern. And this one is more major. This is fairly big swings and across many bars. So that means we can see this bull channel on a higher time frame chart. What that means is you're expecting the market to fail and reverse within 5 bars on the highest time frame that the pattern is visible, and then to retest the trend line, this lower red line down here. So you can argue we broke out here 51, and we had 2, 3, 4, 5, 6 or 7 bars before we started reversing back down. But what if we looked at the 15-minute chart? Here's the bull channel, here's the breakout. The market reversed within just a couple of bars and then retested the trend line. So even though it's across more bars on the 5-minute chart, it still was within 5 bars on the higher time frame where the pattern is still visible. So I just wanted to demonstrate that here. This is still more likely a couple of legs in a trading range. Big up, big down. This is unlikely to lead to a big bear trend. We have breakout points below where there's probably support. Anyone who sold here got trapped on this rally, and sellers here become buyers, so support down here. A couple of legs down, and then a decent rally. The odds are this will get a second leg, but the problem is this entire sell-off needs a second leg, and this is actually a micro channel all the way since bar 55. So the bears will very likely get a second leg that tests the low of bar 66, even if it pulls back deeply first. We had a couple of legs up. Still a micro channel for the bulls. The bulls should get a second leg, but the buyers may not come in until below the bull breakout. And the bears still need their second leg down. And we rallied for another leg, maybe 3 pushes, 1, 2, 3, testing an area where the bulls were trapped up here. And then we had sellers, and we retested almost to the low tick of bar 66 on bar 79. For stop order trades today, not really great down here, tight trading range. If you buy above bar 5, you're buying at the top of a tight trading range. However, in the grand scheme, the big picture, you're buying a low in this trading range, so it's a reasonable trade, but not great. There's a sell below bar 10, but tight bull channel, not ideal. There's a buy above 16 for a couple of reasons. This rally should get a second leg, get a wedge bull flag, and a double bottom with bar 7. So probably buyers above 16, buyers above 17, but then weak follow through. Most traders scalp out and look to buy lower. Not a great high 2 above 24, and then there might be sellers below 30, but if we test support, they may be quick to exit. Probably stop order buy above 33, but 3-bar micro channel and a tight enough channel for a second leg down. We triggered the buy, but disappointing. Pulled back more deeply, and then 37, a reasonable buy, but did not trigger. And then once again 40, a reasonable buy. It's always in long. You can buy above any bull bar or any bar closing above its midpoint. 48, 49, 50 by the close. And just exit when you have a reason to exit. And 55 is certainly a reason to exit. This is acceleration late in a move. And if you don't get out there, you probably just exit below 56. There's a stop order short below 56, but it's aggressive. The stop is big, or the risk is big, the stop way up here, and you're selling against a very tight bull breakout. And then a couple of legs down for the bears. The second leg subdivided into two legs. This is a little climactic. 3 pushes down, 66 parabolic wedge. Likely to pull back, but parabolic wedges are minor. It's a breakout on a higher time frame. Probably going to find sellers above, but okay to buy above 67. Okay to buy above 68 and 69 as well, but probably sellers in this area. We tested here. Why were there probably sellers here at this red line? Because of the market cycle. Bear breakout and follow through, but the pullback on bar 57, the tail on bar 57 is an implied pullback, which is the start of the channel phase. This is the beginning of two-sided trading. In the channels often evolve into trading ranges. In other words, that's what I've been saying earlier throughout the video. There's only a 25% chance this bear breakout succeeds at creating a stronger bear trend. More likely, it's exhaustion. It's an attempt to break out below a channel line, but more likely, 75% of the time, it will fail and reverse and will test the trend line at a minimum. And this being the start of the channel could be the start of the trading range, the top of the trading range. So this is an area, this price level is a magnet. It's an area of interest for traders. Bears would like to sell here, and bulls who bought here and got trapped, scaling and lower, will look to exit up here as well. So you can see the reaction to that line on 74. But as far as selling below 74, tight bull channel, you might need a second reversal. And then somewhere in here, you would have had to go to a smaller time frame to get the stop order sell. Limit order trades today. A couple of dojis on the open. Buyers below, sellers above, limit order market. But then bar 8 traps limit order traders. And I mentioned the limit order traders who sold above bar 4 got trapped on bar 8, and those sellers become buyers. So support at the high of bar 4, you can see 8 sold off, 9 sold off, briefly tested the high of bar 4, and then rallied. There's a buy at that level. Some traders will sell above bar 9. It's aggressive, but it is an inside bar after 3 legs up, and you're expecting a 10 bar, 2-legged correction, but an aggressive sell. But you're selling at the moving average and breakout points to the left after a gap down. And then probably buyers below 14. At this point, there's an implied 2 or 3 legs down, low 1, but possibly at the bottom of a trading range, support below bar 8, the bull breakout. And then a rally on 17, creating a gap, and buyers at breakout points, so the high of bar 12, the high of bar 15, the high of bar 16. These are all levels where limit order traders will place orders to go long. And these traders got triggered on bar 24. These ones did not. The logic behind the trade: you get a strong bull breakout. Maybe you call it minimum follow through. It's a doji, but this is a big enough breakout for buyers below in a second leg, so traders will place limit orders to buy at the price where traders were trapped. Maybe you sold above 14. And most breakouts pull back. We get a brief second leg up, but this is all tight enough to be one leg, one breakout on a higher time frame. And 24 retests the breakout point and then rallies for a second leg. In here, bar 18 was a weak reversal setup, and it's a double top, but after two strong bull bars, probably buyers below, and a doji signal bar, trading range bar. Sellers above 19, it's a bull channel. Traders are taking profits at swing highs. This is more profit taking than traders selling after a fairly tight bull channel. But then you get the trend line break, the retest. 26 was a bad high one, or you can call it a high two, sellers above here. And then a bad stop order above bar 29. Tight bear channel, small signal bar, tight trading range, sellers above. But then buyers down here at the breakout points once again. Especially after you get 33, 34, there's disappointed traders down here at the 32 low. Traders will buy at the 32 low, betting that the bears will not get much further below there, but they will get a second leg, leg one, leg two. And then in this case, maybe you call it a truncated wedge, 1, 2, 3. Buyers below the bar 37, bull breakout bar. And then the rally here, strong enough for a second leg with buyers at breakout points. We did not test here or here. We did test this one, bar 30, so you could buy at the high of bar 30. I'm not sure we got to the 50% pullback of that one. Strong enough bear breakout for sellers above, but we did not get a deep pullback in this case. And then climactic selling here. Aggressive, but some traders will buy below 66 or by the close of 66. And then here, strong enough rally for buyers below, never triggered, maybe by the close of 71, but fairly aggressive after big down, big up, big confusion. You're in the middle of a trading range. 75, a bad high one in a sell zone in a trading range here. Probably sellers above. And then another bad buy above 77, sellers above, sellers on the close. And then that's about it for today. There were also sell the close bears trapped on 66, getting relieved on bar 79. So aggressive bulls might buy here for a scalp, but it's very late in the day. And the approach 78 might be too strong for traders to want to buy there. Today was a bull channel, but you can also call it a bull trading range day. We had a lot of trading range price action throughout the day, here and through here and up here. As strong as this rally looked, it's really just big up, big down, and a lot of overlap. And just look at yesterday. Overall, the market has been sideways. Where do we go tomorrow? Here's the daily chart again. High 2 buy, because we did not trigger the high 2 above yesterday, so now we have a high 2 above today. But the problem still remains for the bulls that they had yesterday. We are in the upper third of this tight trading range in a leg 3. And the odds are there are sellers above today's high scaling in higher. But the bears don't have a great major reversal pattern. So the best the bears can hope for now is sellers above for a scalp. Maybe they get to the moving average within a couple days, but For now, the selling pressure isn't all that strong. We have a tight bull channel and a couple bear bars, but neither one of them have good follow through. So probably sellers above the high 2. It's a bad stop order sell signal bar, so probably buyers below. And the bears hoping we fall below here, the double top neckline. And if we do, traders will sell on the breakout below here, hoping for the measured move down, but more likely the breakout will fail and go more sideways. All right, that's all the time I have for today. Thanks everybody for watching, and I hope everyone has a good night.